Hello, champs. Hope you all are doing amazing. So, as we have begun the revision of Chapter 11 Company Accounts, let's continue with the further units. I hope you guys have covered Unit 2 because that becomes very important to understand this particular unit with respect to the connection we can get through those journal entries, guys. And meanwhile, that chapter is relatively important from the exam point of view also, as I have mentioned in the same. So let's begin unit number 3, issue of debentures. So in the previous unit we had understood issue of shares, along with that there was forfeiture and reissue. So since the concept of issue works in the same flow, the same thing will also carry forward for your issue of debentures. Now, what is this debentures? Difference between shares and debentures. So, if I have to just put it in simple words, debenture from the company's point of view is just like a normal borrowing. So, it is by default considered as a long-term borrowing, but if the company specifically has any exclusive treatment, so it can be considered likewise. So when it comes to share, it directly impacts the share capital of the company, which gives a sense of ownership for a shareholder. Whereas for a debenture holder, it will be just like an investment made in the company. So from the company's point of view, it will be a liability. Whereas from the investor who will be a debenture holder, for him, it will be him or her. For them, it will be an investment on which they can enjoy return as interest. So all of these, let's address one by one along with journal entries. So first, debenture. A debenture is nothing but a bond issued by a company. So this is under its seal, that is as per the company's name. What does it prescribe? Acknowledging a debt. That is, we accept that there is a debt resulting out of this arrangement, and containing provisions as regards with respect to what does the provisions talk about? With respect to repayment of the principal and interest. That's what I prescribe, that it is treated in the nature of a liability. So when it is a liability, there comes an obligation to pay. So therefore there is repayment of the principal, along with that there is interest. Another point here is, no company shall issue any debentures carrying any voting rights, because ultimately voting rights will have an impact on major decision making activity of the company. So since debenture represents a liability that will not have any voting rights, and there is a restriction which provides that no company shall issue any debentures carrying any voting rights. So how can a company issue debentures? Sometimes there will be convertible debentures which can further get exercised into shares. So that is what this point is pointing here. Next, issue of debentures. Just like shares, money payable on debentures may be paid either in full, that is in lump sum, or in installments. Remember, in shares also we understood this. So this is with application or by installments. Accounting entries will differ to some extent in either case. Just there is a minute difference with respect to the account names. Rest all the concept is same. So now, if it is received in lump sum with respect to the debenture issue, the company will simply take the money by debiting bank account and then credit to the liability account, which is representing as any percentage of debentures. So this is in respect of issue of debentures happening through lump sum. So sometimes instead of directly taking for debentures, they can also route it through a separate account called debenture application allotment, both together. That is, since it is not happening in installments, just one lump sum entry. So bank account debit to debenture application allotment, and then transfer of this money, debenture application allotment account debit to percentage debentures, like we were doing share application money. So this was with respect to lump sum. Now here, debentures may be issued at par or premium or at discount. Remember, this is debentures and not shares. With respect to issue of shares, there was a prohibition as per the Companies Act, but for debentures there is no such restriction. So debentures can either be issued at par, premium or discount. Whatever entries we are going to understand now is with respect to issue. First we will understand with issue. So the accounting entries would be as follows. When cash is received, bank account debit to debenture application account. That is, we have offered subscription to debentures. So the debenture holders will revert back with the interest by paying off the application money. So that is when this entry is passed. So this is for the money being received. What is the next entry? Like we understood in shares, the application money will be transferred to share capital there. Here, there is a liability. So it will be transferred to a percentage debentures account. So debenture application account debit to percentage debentures. So this is amount transferred to debentures account. If you observe, I've just written percentage debentures. You will be given a prescribed percentage in question. So that will be the name of debentures. Considering that, we will write it here. Further, when excess money is refunded or adjusted for future calls, remember there was oversubscription scenario. At that point of time, there were two options available in shares. Either refund the money by rejecting the excess application. Second priority would be pro rata allotment. In debentures, thank God that there is no concept of pro rata allotment. So you will just refund the money. So what is the entry for that? Debenture application account debit to bank. Sometimes if I receive allotment money in advance, there is no pro rata concept, just receiving allotment money in advance. So then I will transfer partial amount of excess application money towards debenture allotment account. So this would be the entry. Next, on allotment money being called, like we saw in shares, first we make it due. So here also for allotment money, we will first make it due. What would be the entry? Debenture allotment account debit to percentage debentures. Again, the same concept. Why am I debiting? Because it is in the nature of receivable. Further, an allotment money being received, bank account debit to debenture allotment. Similarly, on debenture call money being called, debenture calls depending upon whether it's first call, final call, to percentage debentures, and on debenture call money being received. So just make a correction here. This is being received. So at that point of time, it will be bank account debit to debenture calls account. I hope whatever entry we understood, there should be no problem for you guys because this is very much similar to what we have understood in shares. Just there, it was share capital. Here it is percentage debentures. I hope this is clear. Further, whatever we understood was if the debentures are issued at par. So now there are other two situations where debentures are issued at premium or at discount. So if debentures are issued at premium, so we know there would be a separate account created called securities premium account. So what would be the entry? Generally, we have seen or understood also premium would be collected on allotment. So that point of time, we will reflect this in the due entry itself. Debenture allotment or call account debit to percentage debentures and to securities premium account. So this was with respect to when debentures are issued at premium. Likewise, debentures issued at a discount. Now first understand one thing. When you are issuing debentures at discount, that means you are receiving less. It is as good as a loss for you. So remember the concept of nominal account, debit all expenses or losses. That's why we are debiting here. So debenture allotment or call account debit, discount on issue of debentures account debit to percentage debentures. So these are the simple issue entries. So likewise, we also understood what could be the entry or treatment with respect to debentures issued at premium or debentures issued at discount. Further, this is where the importance of this particular unit arrives. Accounting entries for issue of redeemable debentures. So you will understand with types of debentures that is covered in your unit 1 as a theoretical point. You can go through that. Also, there are some points with respect to type of debentures in this particular unit. You can refer the study material for that. Redeemable debentures here means the debentures which has an option which comes with that arrangement to repay. Repayment of option is prescribed with this particular category of debentures. So, what could be the accounting entries we will have to record? See, in practical life, majority of the issue of debentures would be redeemable in nature. Because as I told you initially, this is in the nature of a liability. Anyway, we will have to repay. So that is nothing but redeemable concept. So journal entries in each of the above cases, that is whatever cases we have understood, there is one more attachment which gets impacted now with respect to redemption. So what are we going to do now is, along with issue, we will also safeguard if at the time of redemption any outflow would arise for that particular arrangement. We are recording the entry now itself. What are you telling about it, ma'am? So let's understand this with journal entries. First one, debenture is issued at par, normal, redeemable at par. That means it is issued at face value. Par means at face value or nominal value. So redemption is also happening at par. That means, for example, if I am issuing at debentures rupees 10, the redemption, that is repayment, is also happening at 10. That is what redeemable at par means. So for this, what is the entry? Same for receipt of application money, bank account debit to debenture application. Then for transfer of application to debentures account, debenture application to percentage debentures. There is no impact here since nothing is going extra as an outflow at the time of redemption. Next case situation. Debentures is issued at discount and redeemable at par or at discount. So debenture is issued at discount. That means if the face value is 10 rupees, assume it is issued. There was issue price concept which is at 8 rupees. And redemption is also happening at some discounted price, assume 9 rupees. Face value is 10, but issue was at discount. Redemption is also at discount compared to face value. Practically speaking, there could be no person who would accept redemption at discount because that is an ultimate repayment. Think from the point of view of debenture holder. Do you think he will be ready to accept less? So this concept is not relevant practically, but as an entry, this is mentioned in your study material, we will understand. For receipt of application money, bank account debit to debenture application. At the time of making allotment, debenture application account debit. Generally, this can come in allotment. So here, since we are referring to application entry, so here debenture application account debit, discount on issue of debentures account debit to percentage debentures. Here again, there is no extra outflow. So we will normally debit what we understood in the issue entry as well. Further, debentures issued at premium and redeemable at par or at discount. So debenture issued at premium, assume the face value is rupees 10, but the issue price is at rupees 12 and redemption is happening at rupees 9. Logically speaking, do you observe this arrangement to be impacted? Does this hold relevance in a practical life? Definitely no. Nobody will purchase at more and sell at less. I'm talking from the investor's point of view. So this is that situation. What is the entry? For receipt of application money, bank account debit to debenture application account. And for transfer of application money at the time of allotment, remember the issue has happened at premium. So we will have to impact that premium into securities premium account. So debenture application account debit to percentage debentures and to securities premium account. When debentures are issued at par or premium value but redeemed at discount, then it means that the company will gain by paying less. So we are recording the entries from the company's point of view. This gain will not be recognized in the books at the time of issue of debentures as per the conservatism concept. Remember accounting concepts. What does conservatism concept prescribes? Provide for all possible losses but not for all probable gain. So you are expecting there could be a gain if the redemption could happen at discount. But this is a probable gain. You will not record this even though you are aware that it is discount because there is a relevance of conservatism concept. I hope these points are clear till here. Next, debentures issued at par and redeemable at premium. For example, the issue price is happening at 10, whereas the repayment is happening at 12. Now, understand the points seriously here onwards. What does it say? Issue is happening at par. So, fine, normal entry. What do I reflect without any premium coming up? But when I repay, I have to pay something extra. While I received 10, but when I'm paying back, I have to pay 12. So you are aware that today itself, at the time of issue, you know when the time of repayment comes, I have to shell out something extra. Correct? So for that, we will make the arrangements now itself. How? Observe for receipt of application money, bank account debit to debenture application, normal entry because issues happening at par. At the time of making allotment, I will transfer the application money to debenture account, debenture application to debentures. Now, observe this call made consequent upon allotment, that is further stages after application. I will first make it due. Debenture allotment account debit. Observe one entry here. What do you see? There is a separate account getting debited, loss on issue of debenture account debit to debenture redemption premium account. So what does this mean here? First of all, why am I crediting debenture redemption premium? So this is representing your future liability. That is, at the time of repayment, you have to pay the 2 rupees extra. So that is what this is getting represented. That's why to debenture redemption premium account, or we can also call this as premium on redemption of debentures. This is one point because this is in the nature of liability. What about amount taken on debit side? Understand one thing. If I just pass the entry debenture allotment account debit to percentage debentures to debenture redemption premium, do you think the concept of double entry will be holding good here? No. Debit side will have one balance, credit side will show another balance. So this liability which I've created is nothing but a loss which is impacting you. So you are aware that today there is a loss which could happen in the future. As per again the conservatism concept, I will recognize for all possible losses. So that's why I am debiting this on loss on issue of debentures. Now, why am I writing this as issue of debentures? Because I know at the redemption there is this extra money going out. I hope you understood the entry with the concept behind why it has been credited and why debit. Further, debentures issued at discount and redeemable at premium. So first understand for issue. For issue, what happens? We will make it due. So debenture allotment account debit, discount on issue of debentures account debit to percentage debentures because the issue is happening at discount. Now, since redemption is happening at premium, there is again a loss at the time of repayment. So for that, anyway, I will have to credit premium on redemption of debentures like we understood in the previous entry, correct? Now, with respect to this liability, I also had a loss. So I will also have to record one more thing on the debit side, loss on issue of debentures. Now, if you observe, this is the entry, how it will look. This is all same. That's why I'm not again touching on those. See, debenture allotment account debit. Discount, this was on issue or loss on issue of debentures with respect to the premium to percentage debentures and to debenture redemption premium account. See here, if you observe this particular entry, there would be two extra debits. One for the issue, there is a discount, and another there is premium which is paid on redemption, which will be shown as loss on issue of debentures. As per Companies Act prescribes that if you have such both losses, you will add up both and show as one account and need not write both accounts separately. If you write, it is conceptually good to understand, but I suggest you to merge the amount and then write because that is how it is evaluated in your exams as well. Now, what am I trying to tell here is, see, for example, if discount is rupees 2 and your premium is also rupees 2. So, normally, if I have to prescribe this in the journal entry, I will record this as discount on issue, debit, and then loss on issue, debit. Since both are in the same nature, I will have to record it as one particular amount. So, one particular debit of 4 rupees will go. That's why here if you observe, there is discount on issue of debenture plus premium on redemption. Both are shown here. Further, for receipt of call made on allotment, bank account debit to debenture allotment account. Next, debenture is issued at premium and redeemable at premium. When the issue happens, there will be two securities premium account, that is credit. So let's observe the entry. See, this both entries are same. Further, for recording the allotment, debenture allotment account debit, loss on issue of debentures account debit. Why? Because there is a redemption at premium. So that amount will get debited to percentage debentures, to securities premium account separately, and then to debenture redemption premium or to premium on redemption of debentures account. I hope by this you would have got the hold of entries. The complication comes only when the debentures are issued at discount and redemption at premium, or debenture issued at premium, redemption at premium. Especially the redemption is at premium. That is where you have to focus, give importance to the entries. So understand 4, 5 and 6 entry very properly. So this gives you that good hold of what is happening with respect to issue and then redemption. Clear? Further, that was of normal issue and in installments where we saw application, allotment and other things coming up. Issue of debentures as collateral security. Now, what does this collateral security mean? In simple words, this is nothing but equivalent to a secondary security. Secondary security. Now, to just put this in an example, assume I as a company have borrowed a loan from a bank. I would have pledged some of my properties, that is business assets, to borrow that loan. The bank also demands additional security as a collateral. So what the company does is they will just keep this debentures as an additional security. If there is a default by the company in respect of payment of interest on loan or repayment of loan installments, then the bank will obtain all rights to obtain the ownership of debentures. Because ultimately, if you think from company's point of view, debentures is also representing as a liability. So another liability that is taken as a bank loan, I'm just providing this as an additional security. Understand one thing, there is an issue, but how does it actually work? Let's observe this. First of all, here you will understand the literal arrangement of collateral security. See, collateral security means secondary or supporting security for a loan, which can be realized by the lender. In my example, it was bank, in the event of the original loan not being repaid on the due date. Sometimes companies issue their own debentures as collateral security for a loan or a fluctuating overdraft. This is the normal financing arrangement. When the loan is repaid on the due date, these debentures are at once released with the main security. So when the loan is repaid, the charge, whatever was attached with respect to that loan, will be released. In case the company cannot repay its loan and the interest thereon, the lender becomes, that's what I told, becomes the debenture holder who can exercise all the rights of a debenture holder, because ultimately he will be representing as a debenture holder. The holder of such debentures is entitled to interest only on the amount of loan but not on the debentures. This is an important point to observe. See, since because he becomes a debenture holder, he cannot have a claim to receive interest on debentures. Why did he first of all become the debenture holder? Because there was a default from the companies or business side to maintain the due dates, that is with respect to repayment of interest or loan installments. So in this case, that person is only eligible for interest on that outstanding loan and not with debentures. That's what this point prescribes here. Now, we understood the meaning of collateral security. What is the relevance? Why we had to understand this? See, we have to record or impact this as an accounting entry if there were any issue of debentures given as collateral security. There are two methods of recording this. First method. Under this method, no entry is made in the books of the accounts. Why there is no entry? At the time of issue of such debentures. See, first of all, understand what is literally happening. You are just giving your debentures as an additional security. They're not further telling whether it is been actually taken as a debenture holder. That happens only on the due date and if there is a default. As of now, just the debentures possession is not in your business premises, but it is lying with the bank. That is why there is no entry, because there is no issue at all happened. Then what should we do? In the notes to accounts and balance sheet, the fact of the debentures being issued and outstanding is shown by a note under the liability secured. So under method 1, what does it prescribe is you will just record the entry for bank loan, any bank loan being received. And with respect to the debentures which is given as a collateral security, we will just mention this against the liability that these debentures were secured as a collateral security against the loan. There will be no other additional entry for such issue. Is this clear? How it will be done? We will see that in the question. Or just to give you as an example, assume for example, if taken a bank loan of 10 lakh, bank loan will be referred in the liabilities in the balance sheet. Under that, I will just write in the notes telling representing 10,000, or I can also write it as secured by. I'm just assuming there is 10,000 debentures given as collateral security. So secured by 10,000 debentures as collateral. So this is how the note will be given. So under method 1, simply there will be no entry. Whereas under method 2, the following entry will be recorded. See, this arrangement is just a temporary arrangement. As I explained you the structure, how it will work, this is just a temporary arrangement. So here, if you observe the entry, they are impacting issue of debentures, right? So when it is issued, ultimately the money should go credit to percentage debentures. So that is what is happening here. This particular activity will take place only when the default happens. Until then, this entry would be presented in the books of accounts. So you will debit this with a separate account called as debenture suspense account. So you understood the nature of suspenses account in the previous chapter units as well. So likewise here also, this is just open for this particular purpose. So this is just very imaginary, just to impact that there is issue of such debentures. The debenture suspense account will appear on the asset side, because likewise all suspense account will appear on the asset side under other non-current assets, and debentures on the liability side of the balance sheet. That is what we have been observing for debentures. When the loan is repaid, the entry is reversed in order to cancel it. When the loan is borrowed, this is the entry we would record if it is given as a collateral. When it is repaid, this will just be reversed, because ultimately there was no any other issue. Yes or no? Yes. Students should know that this is very important. Method 1 is much more logical from the accounting point of view. Therefore, it is advised to follow method 1. See, when the question comes in the exam, you will not be mentioned about which method to follow, or they can prescribe that open debenture suspense account, which indicates that you have to record the entry as per method 2. If nothing specified, we will just do as per method 1. That will, there will be no entry. We will just provide that under notes to accounts. Is this clear? Yes. Next, issue of debentures for consideration other than cash. See, likewise in shares, we also understood it there. Debentures issued for cash, issued for consideration other than cash. Issued for cash, we understood what could be the structures, whether it is a lump sum or in installments. Now, this is the situation when it is for a consideration other than for cash. So just like shares, debentures can also be issued for consideration other than for cash, such as for purchase of land, machinery, etc. It could be for any arrangement that instead of paying cash, we are just issuing a debentures. So following entries are passed. The first entry, what you observe, if there is any business purchase, this is the entry what we can observe. Assets account debit for the assets taken over, because assets will also be your business assets, so we will debit. Liabilities, assume their own liabilities, we will credit, because if there is a liability for us also, it will be liability. Liabilities will have a credit balance. And then to vendors account with respect to whatever amount we will have to pay as a purchase consideration when there is business purchased. So this is the entry which we understand when there is a business purchase. If there is just an asset purchase, what will be the entry? Asset account debit to vendors account. That is, first we will make it due. Asset account debit to vendors account. So we will first make it due. Later, when the debentures are issued, vendors account debit, we will have to cancel this to debentures account. Is this clear? Further, it should be noted that these debentures can be issued at par, premium or discount. That is, whatever we issue, it could be at par, premium or discount. In each of the case, the second entry for issue of debentures would be done accordingly. So this particular calculation is only with respect to second entry. When the debentures are issued at par, your first point would be to find out how much or how many number of debentures. How do we get that? Purchase consideration, that is whatever we are supposed to pay, divided by par value. When the debentures are issued at premium, purchase consideration divided by issue price, that is par value plus premium. And again, when the debentures are issued at discount, purchase consideration divided by par value minus discount, because this will be subtracted. So this point, whatever we discussed, was with respect to calculating number of debentures, because ultimately you will write this entry, you will not know what could be the number of debentures. So this becomes easier to find it out depending upon the purchase consideration. Next, treatment of discount or loss on issue of debentures. So whatever we understood with the treatment of issue of debentures at discount and redemption at premium, you saw an items getting coming, that is loss on issue of debentures, discount on issue of debentures. This is the treatment which is prescribed for that. See, ultimately, if you observe, those are in the nature of a nominal account. So you cannot balance them. It will be transferred ultimately to profit and loss account. So that is the final step. But before that, the benefit what we would have derived with respect to debentures, if you understand, it will not be just for one particular event. That is, it will be consumed at least for a longer time. So what this point says here is, the benefit you derive should be apportioned with respect to the loss being recorded as well. So, if we calculate one particular amount of loss, it should not be completely debited at one shot. So, anyway, the benefit of debentures is derived for a longer time. We will also write off or apportion it to the benefit being derived. So, what does it say? It should be written off in the following manner depending upon the terms of redemption. First, if the debentures are redeemable after a certain period of time, say for example 5 years, the total amount of discount should be written off equally throughout the life of debentures. Now, what does this point say is, if while I record the issue of debentures, if I know that the debentures is going to be repaid after 5 years, that means I am aware the benefit is going to be used for 5 years. So what I will do is I will write this expense off or loss equally throughout the life of debentures applying straight line method. So what I can do is just take the total amount of loss or discount divided by 5 years. The main advantage of this method is that it spreads the burden of discount equally over the years. Second situation, if the debentures are redeemable at different dates, sometimes what happens, we will consider to repay the debentures at equal installments or at different installments, that is where different dates. The total amount of discount should be written off in the ratio of debentures amount outstanding in each year. Because ultimately what happens, assume for example 5 lakh is the total issue of debentures. Now this 5 lakh they will decide to repay every year in equal installments. So that means if I have to divide it over 5 years, every year 1 lakh decreases. So if I take first year 5 lakh, second year will be 4 lakh because 1 lakh would have been repaid. Third year will be 3 lakh and accordingly it goes on. So here what happens, the benefit is consumed in a decreasing trend. So we will also apportion or write off the expense based on the same ratio. How it will be done precisely, we will observe that in a question. Now understand the concept. So this method is suitable when debentures are redeemed by unequal installment. For both of the cases, we have a question, we will understand. The accounting entries for whatever activity we did will be ultimately, this is for the calculation. First and second point, what we understood will be for the calculation. The entry will be profit and loss account debit to discount on issue of debentures, because that is ultimately your loss. It will be transferred to profit and loss account. Loss on issue of debentures is also a capital loss and should be written off in a similar manner as discount on debentures issued. This we understood for discount. Same works for loss on issue of debentures. In the balance sheet, both the items, that is discount and loss, are shown as non-current or current assets because it will have a debit balance depending upon the period for which it has to be written off. So this is a point we can observe if it is presented in the balance sheet, because first year you would have just reduced whatever belonged to first year. There is still a lump sum amount pending, so that unamortized will be shown in the balance sheet. Is this clear? Now what did I mean by this is, for example, assume your total discount or loss is 50,000. First year, I will just write off 10,000 because it is equally taken. So still 40,000 is remaining. That will be shown on the asset side under non-current or current assets. I hope this point is clear. Next, another important topic, interest on debentures. Now, with respect to interest on debentures, for a company, it is an expense because you are been supposed to pay it on the liability. But for the debenture holder, this will be an income. Clear with this? Yes. So this interest on debenture is paid periodically and is calculated at coupon rate at the nominal value of debentures. This is very important. Most of the students commit mistake here. Always debenture will be calculated on face value irrespective of issue price given in the question. So be very clear, it is done on the face value applying the coupon rate. Now here there will also be a concept of TDS to be understood, wherein the government prescribes that as a company it is an expense for you, but think from the debenture holder's point of view, it is an income for debenture holder. Now, what happens here is, obviously, when there is an income, tax has to be paid on the income earned. Government prescribes that instead of they finding out each debenture holder and then collecting tax, you deduct before you credit the interest, which is actually the income to debenture holder, and then pay that back to the government. So this is how the TDS arrangement work. So in this case, company has to record their expense of interest payment also. Likewise, they also incorporate the TDS impact. So let's understand the entry. See, for making interest due and deduction of tax at source. By now, you should be aware of the format of journal entries. First, it is always making it due. So first, for making it due, interest account debit. For a company, interest is an expense. So we will debit to debenture holders account, because ultimately I have to give to debenture holders itself, then to TDS payable. See, this is part which is deducted from the interest amount which is credited to debenture holders. So for you, it is again neither an expense or income. You will just credit it, but ultimately you have an obligation to pay it back to the government. I hope this structure is understood. Next would be for making payment of interest and deduction of tax at source. So this whatever was due will be paid now. So when what is the payment entry? See, normally understand interest account debit to debenture holders is a due entry. TDS is just a tax attached with the income of the debenture holder. So we will credit. So now we are paying it to the debenture holder who's the receiver debenture holder. TDS payable is also taken here to bank because you're paying so to bank. Clear? Yes. Next, for transferring interest to profit and loss account. See here, if you observe, we have opened the interest account. This too will anyway get cancelled here by making the payment. Interest is a nominal account that will be closed by transferring it to P&L. That is the last entry. Profit and loss account debit to interest. Whatever entries discussed, I hope you are all clear with it. Unit is very simpler, guys. Just understand the flow of entry. You will be easily going through it. Let's practice some questions. First, Agrotech Limited issued 150 lakh 9% debentures of 100 each at a discount of 6%, redeemable at a premium of 5% after 3 years, payable as there is in installments 50 on application and 44 on allotment. Let's break this and understand. 100 each issue is happening at discount. There is a 6% discount. That means 100 minus 6 will be how much? 94. That is why you will observe 50 on application and then balance 44 on allotment because there is a discount element. Further, there is a premium on redemption at 5%. This percentage, whatever is available, be very careful. You'll always apply on the par value or face value. Record necessary journal entries for issue of debentures. See here, there is 150 lakh debentures. So if I just multiply 150 lakh into the respective values, it will be a huge amount. So therefore, always make sure when the question gives you such big amounts, you also make the notation here rupees in lakhs. So what would be the first entry? This is done in installments. There is no impact on application. So first entry will be bank account debit. This is for receipt of application to debenture application. So what would be the amount? Number of debentures is 150 lakh into 50 rupees, 7,500. This is actually 7,500 lakh. Since we have already expressed in lakh, I can just write 7,500. Being debenture application money received. Clear? Next point. This is with respect to transfer of debenture application to debentures account. So what would be the entry? Debenture application account debit to 9% debentures. $7,500 and $7,500 being application money transferred to debentures account. Clear? Next. This is the important entry on allotment. Remember, on issue there is a discount and on the redemption there is a premium. We will merge the account and show as one. So what would be the entry? Debenture allotment account debit loss on issue of debentures account debit to 9% debentures to premium on redemption of debentures. So first, debenture allotment. First of all, debenture allotment money is 44 rupees, 150 into 44, that will be 6,600. Loss on issue of debentures will have two things, one premium and one for discount. Discount was 6 rupees and premium is 5 rupees. How did I get 5% premium? So on 100, it's just 5 rupees. This multiplied with 1,000, 150 lakh. 150 into 11. So this will be 1650. Premium on redemption is just 5 rupees. So 150 into 5. How much will go to debentures? How much will go to debentures? 150 into 50. 7,500. Is this clear? All of you understood? This is an important entry being debentures allotted at discount on issue and premium on redemption. Next would be, first here what we did was allotment made due. So here we will receive that allotment amount. Bank account debit to debenture allotment account. 6,600. B. Allotment money received. I hope this is clear to all of you. Next question. Siemens Limited issued 1 lakh 12% debentures of 100 each at par. So issue is happening at par. Payable in full on application by 1st April. Application were received for 1 lakh 10,000 debentures. Debentures were allotted on 7th April. Excess money refunded on the same date. You are required to pass necessary journal entries in the books of the company. First of all, how many debentures were issued? 1 lakh. Now, if you observe the wordings, this was issued at par and payable in full. That means settlement is done in one amount installment itself. That is on application by 1st April. Applications were received for 1,10,000 debentures. You are receiving 10,000 extra. Debentures were allotted on 7th April. Excess money was refunded on the same date. Remember here there is no concept of pro rata allotment. Any excess we will just refund. So we will just pass the entries for this. There are dates given. So this application money was received on 1st April. Here is mentioned no. 1st April. Bank account debit to debenture application account. So you can also do one thing. You can just write this as debenture application allotment since the installment is received in full. So number of applications received is 1,10,000. So 1,10,000 into 100 because it is issued at par. That will be 110 lakh being application money received on 1,10,000 debentures. Next will be transfer of this application money to debentures account. So this was done on 7th April. Debentures were allotted on 7th April. So debenture application and allotment account debit to this was 12% debentures, 12% debentures account, and to remember you are refunding on the same date. So to 12% debentures, how much amount is only required? 1 lakh into 100 because that is what the normal issue. So this will be 100 lakh. You received extra applications for debentures at 10,000. So 10,000 into 100, that will be 10 lakh. And debenture application allotment you have already credited by 110 lakh. So that will be transferred. Being application money transferred to debentures account and excess money returned. So this too will be the entry. I hope the points are clear. Next. X company issued. This is an important question. Already have been asked in one of the exams. So focus and understand it well. X Company Limited issued 10,000 14% debentures of the nominal value of 50 lakh as follows. To sundry persons for cash at 90% of nominal value of 25 lakh. Understand this point clearly. To sundry persons for cash at 90% of nominal value of 25 lakh. That means the chunk of debentures which is representing has a nominal value of 25 lakh. You are issuing it at 90%. What does this mean? You are issuing it at discount. I hope these points are understood. Next, to a vendor for purchase of fixed assets worth 10 lakh for 12 lakh 50,000 nominal value. Again, a lesser value means it is issued at discount. To the banker as collateral security for a loan 12 lakh 50 nominal value. So first, let's understand the first entry. See, in this case, there is no separate breakup given, like to understand it in installments like application allotment. So we will combine that and write it as debenture application allotment, right? We did in the previous question. So first entry would be bank account debit to debenture application and allotment account. Debenture application and allotment account. So how much will be the amount? 25 lakh is the nominal value. It is issued at discount. So 25 lakh into 90%. So that will be 22 lakh 50,000. Being application money received. 10,000 debentures. So if the total nominal value is 50 lakh, how much would be representing for 25 lakh? It will be 5,000 because total debentures is 10,000. So we can write here being application money received for 5,000 debentures at rupees 450 each. So 22 lakh 50,000 divided by 5,000 will give me 450. So corresponding entry for this is to transfer to the debentures account and also record discount. So debenture application and allotment account debit, discount on issue of debentures account debit, to what percentage of debentures? This is 14% debentures. This will be same 22 lakh 50. How much we credited for? 2 lakh 50. Always debentures or share capital will be recorded at face value. So this will be nominal value 25 lakh. Being application money transferred to debentures account excuse me, with discount at 10% on issue. Is this clear? Fine. So this completes the first part. Second one, to a vendor for purchase of fixed assets worth 10 lakh, 12 lakh 50 is nominal value. So the asset worth is 10 lakh, but you are issuing debentures worth 1250. Again, the issue is happening at discount. So likewise, we will first make it due. So what is the due entry? You're purchasing the asset. So fixed asset account debit to vendor's account. The worth of fixed asset is 10 lakh. Being fixed assets purchased. Next would be to issue debentures. So vendor's account debit, discount on issue of debentures account debit to 14% debentures account. So you are now issuing the debentures. Debentures will get credited at face value, that is 12 lakh 50,000. The asset was worth 10 lakh, which you had credited to vendors in the previous transaction, and discount will be 2 lakh 50. Being debentures issued towards fixed assets purchased as consideration. Clear? Next. To the banker as collateral security for a loan of 10 lakh, 12 lakh 50 again nominal value. So again the loan worth is 10 lakh but you are issuing 12 lakh 50 representing nominal value. Remember, if the issue of debentures as collateral security, there were two methods. Here the question is not specifying anything. If it doesn't specify, we will always follow method 1. What does method 1 prescribe? You will not pass any entry for issue of debentures as collateral security. You will just show that as notes to accounts. So in this case, there is a loan. We will just record the entry for loan. So what would be the entry? Bank account debit. Because when you receive the money, your bank balance will increase to bank loan. A liability getting created. Loan was worth 10 lakh. So 10 lakh. Being loan borrowed. So this is the narration for loan. So what will you provide for collateral security? This will appear in notes to accounts under bank loan secured by for 12 lakh 50,000 if it is the nominal value. See, for 25 lakh it represented 5,000. So other 2,500 would be the debentures secured by 2,500 debentures issued as collateral security towards bank loan. So this will be your note which becomes important to prescribe. Is this clear? This is as per method 1. Since the question prescribed nothing, we understood by providing method 1 would be more suitable. So this was third question. Next. HDC Limited issues 1 lakh 12% debentures of 100 each at 94. So the face value is 100, issue price is 94. That means there is a discount of 6 rupees on 1st Jan 2017. Under the terms of issue, the debentures are redeemable at the end of 5 years. So understand this carefully, at the end of 5 years from the date of the issue. Calculate the amount of discount to be written off in each of the 5 years. Remember treatment of loss or discount on issue? That is what the question is. Here, the first case to understand is the redemption should be very important to consider because based on that only we will judge the benefit is used for how much period. So this is redeemable at the end of 5 years. So you will have to write this off every year equally. So first we will find out how much is the discount. Discount on issue. You have issued 1 lakh debentures. Discount is 6 rupees. So this will be 6 lakh. If I have to apportion it over a period of 5 years, this will be equally taken 1 lakh 20, 1 lakh 20 and 1 lakh 20. So if I have to just write this down, 1st Jan 2017, year 1, 2, 3, 4 and 5. So apportionment of discount, that will be 1 lakh 20, 1 lakh 20. So every year I will write it off 1 lakh 20, 1 lakh 20 accordingly. That is what this means. 1 lakh 20. So how did we get this? 6 lakh divided by 5 years. So this becomes very important for you to interpret with the wordings. Why did we do it in this format? Because it is redeemable at the end of 5 years. Clear with this? Yes. Next question. HDC Limited issues 2 lakh 12% debentures of 10 each at 9.40 on 1st Jan 2022. Similar way, 10 each at 9.40 means issue is happening at discount. 0.6 would be your discount. Under the terms of issue, one-fifth of the debentures are annually redeemable by drawings. The first redemption occurring on 31st December 2022. So, this is where the wordings become very important. What is the difference between this question and the previous question? If you observe, in the previous question, the redemption was given at the end of 5 years. So, we just applied straight line method and uniformly took the debentures amount. Whereas here, this is depending upon the number of debentures present in the particular year. So why this is taken relevantly is one-fifth of the debentures are annually redeemable. That means my total debentures is 2 lakh. If I have to take it in the value, I will multiply it with the par value. So that value is divided in one-fifth portion. So if this is the scenario, we will have to first find out the ratio. Based on that ratio, we will apportion the discount amount. Is this clear? Yes. So first year. So first redemption is occurring on 31st December 2022. So we can just represent years 2022, 22, 23, 24, 25 and 26. So there are 5 years. Redeemable amount. First year, what would be the worth of debentures? 2 lakh debentures at 10 rupees. So 20 lakh. So by moving on to the next year, one-fifth would have been redeemed. So divided by one-fifth means 4 lakh would have been repaid. So how much will this represent? 16 lakh. 20 lakh minus 4 lakh. Likewise, 16 divided by 4, again 4 lakh. So 12 lakh. 12 divided by 5 again. So this again 4 lakh will be equally apportioned, annually redeemable. So again 4 lakh, if I take this will be 8 lakh. And at the end I will be left with 4 lakh. So this is the redeemable amount. So we will just apportion this in the ratio. So if I have to just commonly take out all zeros, you can observe 20, 16, 12, 8, 4. So if I just divide it by 4th multiple of 4, I can get 4 5s are 20, 4 4s are 16, 4 3s are 12, 4 2s are 8 and 4 1s are 4. So this gives me the ratio of apportionment. This redeemable amount was required because of this ratio. So whenever we come across with ratio, the total is also important. So 5 plus 4 plus 3 plus 2 plus 1, this will be 15. So amount to be written off. We shall just calculate the discount value. Discount on issue of debentures. So that will be 2 lakh into how much is the discount? 10 minus 9.40. You can also represent it like this or multiply direct with the value. 0.40 is 0.6 into 2 lakh. This will be 1,20,000. So we will divide this 1,20,000 in the ratio which we have found out. So 1,20,000 for the first year will be 1,20,000 into 5 by 15. That will be 40,000. So how did I get this? 1,20,000 into 5 by 15. Next, 1,20,000 into 4 by 15. So that is 32,000 into 4 by 15. Next, 1,20,000 into 3 by 15. That is 24,000. 1,20,000 into 3 by 15. Next, 1 lakh 20 into 2 by 15. This is 16,000. 1 lakh 20 into 2 by 15. Last, 1 lakh 20 into 1 by 15, which will be 8,000. So just cross check whether it all totals to 1 lakh 20, 40,000 plus 32 plus 24 plus 16 plus 8. So 1 lakh 20,000 was written off in this particular format. First calculating the ratio in which the amount of debentures, outstanding debentures is redeemable. I hope the difference between both the question is clear. Here it was redeemed at the end of fifth year. So one common amount you apportioned it equally. Whereas here there was 1/5 of the debentures annually redeemable. So first we calculated redeemable amount and then we found out the ratio out of it and then amount to be written off. I hope this is comfortably understood. Next question. A company issued 12% debentures of the face value of rupees 10 lakh at 10% discount on 1st Jan 2022. Debenture interest after deducting tax at source at 10% was payable on 30th June. So there are two installments paid half yearly and 31st December every year. All the debentures were to be redeemed after the expiry of 5-year period at 5% premium. So there is premium on redemption. Past journal entries for the accounting year 2022. So you're just asked the accounting entries for 1 year, that is 2022. What does the question says? The company issued debentures 12% of the face value of 10 lakh at 10% on 1st Jan. First of all, we will have to record the issue. There is redemption, there is premium on redemption. So that impact should also be considered. So first entry, 1st Jan 22, bank account debit. Like we did in one of the question earlier, we will record both at one shot because there is no installments mentioned. To debenture application and allotment account. So how much is received? 10 lakh is expressed in rupees at 10% discount. So this will be 9 lakh. Being debenture application money received. Next, this needs to be transferred to debentures recognizing discount on issue and then premium on redemption. There is no other dates given. So we can refer to same date. What will be the entry? Debenture application and allotment account debit. There is discount on issue. So loss on issue of debentures. To 12% debentures. To premium on redemption of debentures. So debenture application allotment, you were taken it at 9 lakh. Loss on issue would include two things. One, discount on issue and one more, premium on redemption. So discount on issue is 10%. So if I have to take it, express it at 100 rupees as the amount. So this will be taken as 10 rupees and there is 5% premium. So that would be 5 rupees. So if I just have to consider it in the monetary value, 10 lakh into 10% will be 1 lakh. 10 lakh into 5% will be 50,000. So 1 lakh 50,000. How did I get this? 10 lakh into 10% plus 10 lakh into 5% because both needs to be shown together. So 12% debentures, it will be 10 lakh and 50,000, which is 10 lakh into 5%. Is this understood? Being discount on issue and premium on redemption recognized on transfer entry. Narration, you can write just to explain what is the entry all about. So this we first recorded about issue. Next, we will have to provide for debenture interest. As you observe, there are two installments of payment, one on 30th June and one more on 31st December. So first on 30th June, remember the entries we understood. So for company, interest is an expense. So we will first make it due interest account debit to debenture holders account and then to TDS payable account. Remember? So what is the coupon rate? 12%. So face value is only given to you, that is 10 lakh. So how do we calculate this? 10 lakh into 12%. Remember the issue happened on 1st Jan. This is on 30th June. So Jan, Feb, March, April, May, June. So 6 months, 6 by 12. 10 lakh into 12% into 6 by 12. This will be 60,000. For interest, TDS rate is given in the question at 10%. So on 10%, if we apply, this will be 6,000. 54,000 will go to debenture holders because ultimately that is his income on which he is supposed to pay tax. Being interest made due along with okay, we can just write this as subject to TDS at 10%. So how did we get this? 60,000 into 10%. I hope this is clear. So this was on 30th June. The question says that it was payable. Debenture interest after deducting was payable. All the debentures were redeemed. So we can also understand this this is paid. So let's assume that it is paid on the same date. Bank account debit, sorry, you are paying this. So the entry will be debenture holders account debit, TDS payable account debit to bank account. So debenture holders 54,000, TDS was 6,000. So company has to release 60,000. Being interest paid for 6 months. Now there was one more interest payment happening on 31st of December. The same entries will again come because the interest is being reflecting half yearly. Interest account debit, debenture holders account debit to TDS payable. So you will pass the same entry. Same interest account debit, debenture holders account debit to TDS payable. Just yes. So likewise, we paid the same entry again gets reflected as on 31st December. Here, 31st December. Is this clear? So this completes our interest entry. But if you not miss out, this majority of the students will miss. There were two nominal accounts which were opened. First, loss on issue of debentures, and then there is one interest which needs to be transferred to P&L because they are asking us the entry at the year end, 31st December 2022. So these needs to be transferred to P&L account 31st December 22. So first, profit and loss account debit to interest. So if I take the combined interest, 160,000 and 60,000. So total interest is 1,20,000 being interest transferred to profit and loss account. Clear? This was about interest. Next, there was one more account which is loss on issue of debentures. Same treatment what we understood. See here, if we refer back to the question specifies that all debentures were to be redeemed after the expiry of 5-year period. That means we will do it as per straight line method. What was the loss on issue of debentures taken? 1,50,000 divided by 5 years. Each year we will write off 30,000. So 31st December, profit and loss account debit to loss on issue of debentures. So this also includes your discount loss both together. So that's why we are taking one combined amount 30,000 and 30,000 being loss on issue, which includes discount and premium on redemption written off for first year. Now to understand how did we get this, your loss was how much? 1,50,000. So 1,50,000 over the period of 5 years will be 30,000. Every year 30,000 will be written off. I hope these questions were comfortable to understand. So if you just analyze guys, the topic of issue of debentures was simpler enough. You require the complete base of what we discussed in issue of shares. So this becomes relatively easy. Other few important points, what came additional was issue of debentures as collateral security, treatment on loss or discount, and then at the end, interest with respect to TDS along with that concept. So just understand the flow. Practice all of these questions. Whatever questions we solved is definitely a must do before you go for exams. Practice it really well from your end, guys. So keep revising, keep giving your best until I see you in the next video. Take care. All the very best.